Hi everyone, a very good afternoon to each one of you. So first of it, before we get the session started, a very happy Puja holidays for each one of you. Best wishes for a very prosperous year going forward. So on this auspicious occasion, just before the Saraswati Puja and Ayuda Puja, it is extremely a pleasure for us to get connected with you through this Zen Tax Talks 44th session on a very, very important topic relating to inspection and search. So search also along with seizure. So for handling this topic, we have our eminent expert and our CTO, CAK Jayamohan, who would explain to us about handling of departmental inspection, search and seizure under the provisions of the CGST Act. But before we get started, something which has been coming forward in the very recent times has been the recent notifications on two major transactions. One is with respect to the reverse charge mechanism on rent of any property. This is a transaction for which reverse charge is now becoming applicable from today, from the 10th of October 2024, for this specific transaction, if for in any situation where the service provider is an unregistered person, that is the landlord. The person who is letting out the property on rent is an unregistered person, and such premises is taken on rent by a registered person. So you are a GST registered person. The service provider, the person who is giving the premises on rent is an unregistered person. Then you have to pay GST under reverse charge mechanism for the period beginning from 10th of October 2024 and thereupon continuously. So this is one of the important amendments that is now very recent and is now being made applicable. So, sir, can I take the input tax credit of the reverse charge ITC, of the reverse charge tax that I have paid? Yes, you are eligible to take input tax credit, but that is subject to other situations and conditions as provided for in law. Say, for example, a very good friend of mine today from the professional fraternity raised the question to say, if it is in the case of a restaurant where they are not eligible to claim input tax credit, this GST paid under reverse charge mechanism will become a cost. So whether the GST paid under reverse charge mechanism for the renting of any immovable for the renting of any property which is used for business purposes, that is other than a residential dwelling, the input tax credit eligibility is a separate subject altogether. But from today, from the 10th of October 2024, it is very, very clear that you are liable for payment of tax under reverse charge mechanism. So a very practical insight as shared by our mentor and chief advisor CAP Paul Tangam has been that for the period up to September 2024, please evaluate what are the rental expenses that you have been incurring. For all these rental expenses, please check the invoices, whether it is an invoice with GST or an invoice without GST. If it is an invoice without GST, please make sure that for the period from October, you are making the payment of tax under reverse charge mechanism. So this is the first important amendment that has been coming up this week, and we wanted to highlight it to you as part of this Zen Tax Talks webinar 44th session. The second important amendment is with respect to purchase of metal scrap. With respect to purchase of metal scrap, there again, if you are purchasing from an unregistered supplier, then you are liable to make the payment of tax under reverse charge mechanism. If the supplier is a registered person, the recipient, you are also a registered person, then he will be charging GST. You can take input tax credit straightforward, no problem. In addition to this, there has been one more additional compliance requirement to say that you shall deduct GST TDS at the rate of 2%. Sir, for purchase of scrap, there is already TCS under the provisions of the Income Tax Act. Income Tax Act provision are a separate provision altogether. Under the provisions of GST, there is also one concept called as GST TDS. And this GST TDS is also becoming applicable from the 10th of October 2024 with respect to purchase of metal scrap from a registered supplier. If my supplier is unregistered, straightforward, no GST TDS, I need to make the payment of tax and reverse charge mechanism at the rate of 18%. Or to generally say, at the tax rate applicable for that particular goods. So these are some two new amendments which are coming into place from this week, from the 10th of October 2024, that is today, and we wanted to bring it to you as part of today's session. So today's session is going to be a very interesting and important session relating to the inspection under the provisions of the CGST Act, search and the related provisions of seizure. So with respect to this, we will have a very detailed and a practical elaboration and discussion going forward. With respect to the other two amendments that I have now highlighted, we will definitely take it upon in the forthcoming sessions also as a very detailed and an elaborate session on what could be the practical implications. But since this has been a very recent update that has come, we wanted to keep our audience, the participants of our webinar, updated about this very important and recent development. So now we have the session over to CAK Jayamohan for this important topic on inspection, search and seizure. So once again, wishes to each one of you on the very auspicious occasion of Saraswati Puja and Ayudha Puja. Wishing you all a very happy, prosperous days again. Thank you.
Good afternoon, everyone. And thank you, Arvind sir, for sharing the recent updates regarding the notification that came a couple of days back. So I welcome you all to this 44th webinar of Zentrax Clinic. We have been trying to impart the GST knowledge and disseminating the GST notification circulars, latest updates through this dedicated webinar, which has been organized, from first session to our 44th session without fail. So at this opportunity, we thank our team members and also you, the attendees, who are joining in from various parts of Tamil Nadu and Kerala and other states also. So I extend my gratitude to all of you. So we'll directly move into today's topic: handling inspection, search and seizure under GST. GST la pathina ellarum ஒரு டிபார்ட்மெண்ட் ஆடிட், ஒரு நோட்டீஸ் ரிப்ளை, அப்பீல் எல்லாமே கொஞ்சம் ஃபெமிலியரைஸ் ஆயிருப்பீங்க. ஏன்னா அப் டு ஃபினான்ஷியல் இயர் 2019-20 அசஸ்மெண்ட்ஸ் எல்லாமே வந்துட்டு இட்ஸ் ஓவர். அப்பீல் போயிருப்போம். அண்ட் இப்போ செக்ஷன் 128A இன்ட்ரடியூஸ் பண்ணி வித் எஃபெக்ட் ஃப்ரம் 1st November 2024 நோட்டிஃபை வேற பண்ணிட்டாங்க. ஸோ இன் திஸ் ஜங்க்சர் நம்ம திரும்பி பார்த்தோம்னா financial year 17-18 to financial year 19-20 has been a very wavy ride. அது ஒரு மாதிரி நிறைய பேர் பெரிய டிமாண்ட்ஸ் வந்திருக்கு. ஒரு சில ஆட்கள் அப்படியே அதுல அப்படியே இது பண்ணியிருக்காங்க. ஸோ some of the industries did not get notices at all. So like that, அது ஒரு மாதிரி ஒரு ரைடா போயிடுச்சு. ஆஃப்டர் தட் இன்ஸ்பெக்ஷன், சர்ச், இந்த மாதிரி ப்ரொசீடிங்ஸ் எல்லாம் certain instances maybe where they could not send a show cause notice within the time limit prescribed under section 73. And the situations the department has resorted to inspection in certain instances. And the mari nadandirukku. So other than that, inspection ellarume paathirukkuradhukku vaayippugal kammi. So inspection edukaga GST la self assessment basis la dhaan nama return file panni tax pay pannittu irukom. So self-assessmentல பண்ணும்போது what is the challenges faced by the department? டிபார்ட்மெண்ட் பொறுத்த வரைக்கும் நீங்க செல்ஃப் அசஸ் பண்ணி டிக்ளேர் பண்ணி இருக்கிற சேம் வேல்யூ அண்ட் டாக்ஸ் லைபிலிட்டி வெதர் இட் இஸ் கரெக்ட் ஆர் நாட் அப்படிங்கிறது அவங்களுக்கு வந்து தெரியாது. ஸோ ஃபார் சம் ரீசன் தேர் ஆர் டிஃப்ரெண்ட் பிசினஸஸ் who operate under different circumstances. எல்லாருமே வந்து ரொம்ப ஆர்கனைஸ்ட்னு சொல்ல முடியாது. டிஃப்ரெண்ட் கைண்ட் ஆஃப் ERPs யூஸ் பண்ணுவாங்க. ஒவ்வொரு இடத்துல பிசினஸ் வச்சிருப்பாங்க. ஸோ இது எல்லாமே வந்துட்டு செல்ஃப் அசஸ்மெண்ட் பேஸ்ட்ல தான் ஜிஎஸ்டி கட்டிட்டு இருக்காங்க. ஏதாவது ஒரு பிரச்சனை இருக்கு, யாராவது அண்டர் ரிப்போர்ட் பண்றாங்க, இன்கம் கன்சீல் பண்றாங்க, வில்ஃபுல்லா வந்துட்டு ஒரு அண்டர் ரிப்போர்ட் பண்றாங்க, இந்த மாதிரி சிச்சுவேஷன்ஸ்ல எல்லாம் ஹவு கேன் டிபார்ட்மெண்ட் கெட் தி ரெவென்யூ பேக்? And how can the department ensure proper collection of revenue? அப்ப அவங்களுடைய சிஸ்டம் எப்படி ரோபஸ்டா கொண்டு போகலாம் அப்படிங்கறது வந்துட்டு they are trying to make their system robust by doing this inspection or search or seizure as per the powers given to them by law. So inspection, what do you mean by inspection? Inspection of the business premises where it is authorized by an officer who is of rank not less than a joint commissioner has a reason to believe where a particular taxpayer is concealing revenue, underreporting revenue, or has claimed excess input tax credit or refund. In these situations, he or she may initiate an inspection proceeding against the taxpayer. So, inspection, it has been laid out in under section 67, subsection 1 of CGST Act 2017. It is not intimated in prior, unlike GST departmental audit or a scrutiny of returns and all those proceedings. It is carried out just by issuing notices through the common portal. Whereas GST departmental audit, a 15 days, of minimum of 15 days notice is served to the taxpayer, and then the department, according to their convenience, they either visit the premises of the taxpayer to conduct the audit, or they would request the taxpayer to bring the books of accounts to the office of the department officer. So like that, department audit is conducted. Whereas inspection, it is not informed in advance. They just come to your place of business to carry out the inspection. So whether these officers are empowered to come to any place or just the place of business, this is a very important question. So you can see that any place where the taxable person stores goods, maintains books of accounts. So for ease of understanding, we can take it this way. You have added a place in your GST registration as your place of business, and you have added another address as your additional place of business. So in this situation, either the place of business or additional place of business where you are storing your goods or the books of accounts, it can be inspected. If that address is a residential address, that place can also be inspected. If it is not, if that particular address, for example, there is a partnership firm, in that partnership firm, a particular partner, one partner A and B. So partner A is having a his residence at one place, and it is not added as additional place of business in the GST registration of partnership firm. In that case, the residence cannot be, the address or the place of residence cannot be inspected under this section. It is not possible. Whereas only the place of business which is added to the GST registration can be inspected using this power. So all these details, the data, generally we store the data in ERP, either it might be Tally or other cloud-based platform, whichever ERP, we have to provide access to the departmental officials to check the data available at the place of business. At this point of time, we might have a question, whether the officers can seize the data. What does seizure means? Seizure means taking away the data with the officers. Can they take the whole of data and, can they just log the data and take it from you? This is not possible under inspection. The power of inspection, search and seizure is entirely different. The proceeding has different due processes which has to be followed by the officers. Considering those processes, which will be discussed in the forthcoming slides, at the point of inspection, seizure of goods or books of accounts or any other documents is not authorized. How is the authorization procedurally happen? So a form called as INS 01 is issued by the Joint Commissioner, and in that form, the place of business and other aspects is laid down in detail, and the officer who is authorized to do the inspection must follow all the details which are mentioned in form INS 0. So here, the inspection, we are talking only about the inspection other than inspection of vehicle in movement. Inspection of vehicle in movement is not covered here. It is a completely different set of topic and different adjudication process, which is followed by the rowing squad. So we'll discuss that topic in detail in some other sessions. So under search, so coming to search, now that we saw what is inspection, under search, what are the power available? So search, it is the officer who is carrying out a search procedure is empowered to search the residence also. In the earlier example that I told you, a partnership firm where there is a partner A and B. In that example, while carrying out an inspection procedure, the officer was not empowered to carry out inspection at the residence of partner A because it was not added as a place of business or additional place of business in their GST registration. Whereas in a search procedure, they are empowered to do search at the residence place also. That is the main difference in search. So can an inspection be turned to a search? It is very much possible only after obtaining proper authorization in Part C of Form INS1. The proper officer who has been empowered by the Joint Commissioner can perform search function also during the course of inspection, if the reason to believe is evident and strong, and he is very sure that there are income conceals or underreported sales or excess claim of input tax credit or other information. By doing a search procedure, he will be able to unearth those details. If he is sure, then at that point of time, an inspection proceeding can be changed to a search also, and then it might be followed by a seizure. So what are the main reasons for which a case or a taxpayer's place of business is subjected to inspection? What might be the possible reasons? See here, I have listed certain reasons on a generic level. It's just an overview. In the last slide, I also have a specific set of information which you have to be mindful to ensure that your GST number is not triggered for this investigation exercise. So these days, you very well know that the department is relying on big data analytics for finding out who is doing what, and they have prefixed the parameters based on which they take the decision to carry out a departmental proceeding or inspection and all these things. So they accumulate information from various sources and do this exercise. So first one is suppression of transaction or stock of goods. So generally, during an inspection proceeding, once the team of officers arrive at the place of business, they usually ask you the financial statements for the prior period. Like for example, during the month of October, if your place of business is subjected to inspection, the officer who is coming to inspect your place of business is likely to ask you the financial statements as on 31st March 2024. Once you hand over these financial statements, they take the value of stock from that statement and then they add the purchases and subtract the sales for the period up to the current date. And they arrive at a stock and physically they verify the stock, and if there is a discrepancy between this stock, they usually consider it as underreported sales, and they will charge tax on this. This is a usual process followed at the time of inspection by the officers. Another one is excess claim of input tax credit or excess claim of refund. See, this data can be verified even sitting at the office itself. For them, they can analyze the data available with them, and they can check the pattern of input tax credit being taken by you over the course of period, maybe 5 years also. and also if there is any refund which has been claimed by you. And in your GSTR 2B, there are some capital goods or ineligible, probably ineligible input tax credit, which the department thinks that you might have claimed a refund for those ineligible input tax credit. In those situations, your case might be triggered for a inspection. Another one is ITC claimed on bogus invoices. So this issue has been prevalent for a while, and you can see that the input tax credit of a particular the electronic credit ledger of a particular taxpayer is being blocked if any taxpayer has been found as involved in bill trading activity, then whole chain of GST numbers are identified and blocked by the system itself. So these kind of things are there. So this might trigger an inspection. Another one is maintenance of books of accounts, which is not as per the manner which is specified under law. So maintenance of books of accounts, if you are maintaining simultaneously 2 or 3 books of accounts, you have been billing in one software and you have been keeping accounts in another software, better ensure that the data between there is some kind of consistency between data maintained in the ERP system, billing software, and those kind of things. Because otherwise, if at the point of inspection, the officer might feel that you are underreporting sales because the value of sales reported in your billing software or invoicing software and your accounting software is different. So that is also a possibility. Another one is escaping payment of tax. It is a very general term. So escape payment of tax, it is identified. Maybe there is a difference between GSTR 1 and 3B. It has been so long since you have not addressed the gap between GSTR 1 and 3B. Now that you have automated noticing system in the GST portal, which would throw a notice once there is a discrepancy between your GSTR 1 and GSTR 3B. If the total liability reported by you in GSTR 1 is not fully paid in GSTR 3B, then the system itself trigger a notice and you have to reply it in another 7 days. Otherwise, an automatic recovery is also initiated. So in that case, it is not of very huge significance. It might not come up to investigation level itself because the show cause notice would be issued much earlier. So another case is if the transaction is not supported by e-legal. So you might have come across different situations wherein the difference between tax liability as per e-way bill report and GSTR 1 is subjected to question in your scrutiny of return. It might be a show cause notice or an ASMT 10. So in these notices, total tax liability reported as per e-way bill and GSTR 1 is scrutinized. If you do not provide a valid explanation for the inflated tax liability reported in the e-way bill report, then your case might be taken up for investigation. This is the broader comparison between the proceedings under inspection and search. So under inspection, you can see that it is more of a verification nature and it can only be done at the place of business of the taxpayer. Forceful action like break open the place cupboards and the other places where access is not commonly provided, it is not possible under inspection, whereas under search, it is possible. Even under search, there is a difference. You can see that even the employee's place of residence can be searched, which is not possible at all under an inspection proceeding. During an inspection proceeding, whether an officer can seize your goods? No is the answer. It is not possible to seize the goods, whereas under search proceedings, goods can be seized. And at a later point of time, if it is ascertained that the taxpayer has evaded tax, in that case, this goods can be confiscated and also be sold by the department to realize the evaded tax liability along with interest and also penalty. So likewise, the goods, the books of documents or any other secreted documents. The secreted documents is the exact words used in the law. It will depend upon case to case what amounts to secret. And at this point of time, I would really urge each of you if you are facing an inspection proceeding, to provide 100% cooperation with the officers who are conducting inspection, so that they are not invoking this aspect like a secreted document. If it is taken like a secreted document, then the penalty will be a huge amount, and the evasion of tax, the quantification of amount would be very, very high. Now we'll proceed to see what are the steps which are generally carried out in an inspection proceedings. So how does it start? It gets started when an officer who is collecting and gathering, there are intelligence things in the department. In that, there are many officers who are regularly working to collect and accumulate and consolidate data from various other sources, like it might be from the CBDT, from sub-registrar. These days, they are also taking various data from e-commerce websites also. So there are a lot of data available online. They used to see the pattern and check the details, and then they finalize the reason to believe. So this reason to believe is of utmost importance to initiate the inspection proceeding. Once the data is accumulated, then the proper officer gets approval from the Joint Commissioner in Form INS-1 to perform an inspection proceeding against a taxpayer. So the Joint Commissioner should be satisfied with reason to believe, which has been framed by the officer who has gathered the information. So I have been talking about reason to believe for a while. So what does this reason to believe explicitly mean? Some of you might have already been exposed to this concept of reason to believe in income tax. Whereas in GST, what can this indicate? I have just put across two examples which might help you to understand in a better way what a reason to believe shall constitute. There is a difference between e-waybill report and GSTR1, as I was talking to you in the previous slide. So there is a tax payable which is reported in your e-waybill report, and there is a tax payable in GSTR1. Say, for example, as per e-waybill report, the tax payable is 10 lakhs, whereas in your GSTR1, the tax paid, the tax payable as per GSTR1 is 8 lakhs. In this case, 2 lakhs difference might be due to goods sent for job work or in delivery challan. It might be for whatever reason. Those who are familiar with e-waybill report very well know that the transaction type as outward supply should be selected. In that, we would have reported the tax invoices in the e-waybill report. So if you have to compare those outward supplies for which the document type is given as tax invoice, and that tax liability should be compared with the e-waybill GSTR1 tax liability. So if there is difference, the system doesn't do all this analysis. We sitting here with those reports and knowing what our business is doing, we might have better control over the data, and we might know that it actually doesn't matter because we have taken the e-waybill for job work. But the system doesn't know that, and the system might think this case is fit for inspection because they have generated e-waybill and they have reported as tax liability, whereas in the GSTR1, they have not reported. So there is a possibility, and this can amount to reason to believe for the officer who is verifying your e-waybill report and GSTR1. Whether lower payment of tax for some reason. You might be aware that in the automotive industries or OEM manufacturers, the price fixing is done at frequent intervals. It is not that for each and invoice I used to negotiate and I fix a price. It is that you have a price list which is revised every 3 or 4 months period of time. So considering this situation, there might be instances where based on the price revision, I may have to issue credit notes, which would reduce my output tax liability. So in this situation, if I am issuing credit notes consecutively for 3 or 4 months, my output tax liability is getting reduced. So in this situation, it results in lower payment of tax. Merely because I am paying lower taxes, it doesn't mean that I am doing any kind of malpractices. It might also be a situation where the business is also not buoyant, it is not doing well, the industry as a whole is not doing well. So that might also be a situation. So there are various dimensions which has to be looked into before considering lower payment of tax as reason to believe. So my point is that any difference between e-way bill report and GSTR1 report might constitute a reason to believe. Lower payment of tax as such, mere lower payment of tax might not trigger the concept of reason to believe. So you have to be mindful of certain situations and also mindful of all these patterns and see whether check how your business is performing. Whether there is accumulation of ITC over a period of time without proper reason. If there is accumulation, whether it is due to an inverted duty structure or whether you are doing export under LUT and not claiming refund. So those kind of things you have to analyze. If without that the ITC is getting accumulated, it might be a situation where you have a huge stock position. So if that is also not the case, then you have to seriously look into this matter and identify what is the reason. Step. So next step, the authorized officer can conduct inspection or inspection then followed by a search, as I told earlier, along with witness. They have to bring a witness along with them to conduct to do the inspection at one place. And during a search proceeding, if they are doing the search of a residence, then a lady officer shall also be accompanied. After arriving at the location, so you at the place of business, the officers has come. You can request them a copy of INS1, and you can also ensure that whether the address stated in INS1 is the exact address which they have come for verification. See, we generally get intimidated once the officers come as a group to our place of business. For whatever reason, we get intimidated. So I request each one of you to just not panic and just ask them politely to show the inspection INS1 form and also the authorization, and just identify the officers themselves and then take it ahead. Without getting the INS form, we lose the golden opportunity to contest on the validity of the proceeding initiated by the officer who has come to visit your business premises. See, it will be of great help at the later stage of proceeding if you have the copy of INS1 form. In many cases where we have we have spoken with the taxpayers who have come to us after getting a notice after the inspection proceedings, they have failed to obtain a copy of what is the reason to believe for the Joint Commissioner to issue an inspection notice, or the copy of INS01 as such. They might have been intimidated by the officers and they have failed to get the copy. But I definitely insist each one of you to keep this in mind. And if there is a proceeding, definitely get a copy of INS1 from the officer. So what are the powers? Whether under inspection, they can do anything after coming to your place of business. Like, see, I told that the powers of inspection and powers of search and seizure are very much different. Inspection is on the softer side, and the power to search and seizure, you have the power to inspect any place and break open the doors, everything is there. So in that, considering this differentiation, inspection is limited to the areas which are stated under the INS-1 form. And generally, the proceedings of inspection is to be conducted during the working hours. The extension can be sought by the officers. There is a possibility, but generally it should be in the working hours. So, say the reason to believe is validated by the officer, and further approval is also obtained in Part C. At that point, a search was being a search exercise is being initiated by the officers. So at that point of time, what is the recourse available for you? See, during the proceedings, you have to provide your full support and give access to all the places which are available physically within the premises to the officers. Otherwise, see, it is of very important. It is very, very important that you have to be very cooperative with the officers, give the access to the ERP systems, computer systems, and also the physical files if it has been kept elsewhere. You cannot just like that, tell them that it is not available, it is kept at some different place, and agitate the officers. So to whatever extent possible, maybe you can buy some time by giving the voluminous data initially and let them go through those kind of data. And at that point of time, it is very important that you need not panic and be cooperative with the officers and assist them to complete the proceedings of inspection. So search under section 67(2), it should be limited to the goods liable for confiscation or the documents that are secreted. As I told earlier, at the time of inspection, the officer would have formed the reason to believe. And based on that reason to believe, he or she has identified what are the goods that has escaped payment of tax and which is liable for confiscation. So the search should be limited to those goods and also the books or documents which they assume has been secreted. If during the proceedings, the company or the officers are not cooperative, then as we discussed earlier, the officers might break open. We might have come across many news in the media that the GST officials stormed into some restaurants, some malls and all, and they have detached the electronic devices and they have taken many documents into custody, and then they have issued summons. All those things we might have come across many news channels, but this is how it happens at the ground level. So to exercise additional powers from inspection to search, this should be authorized. The Part C of INS form should be filled and duly authorized by the officer. Moving on to the next step. The most important aspect here is that many of the businesses or the taxpayers, they come to us after making payment of tax. I will recall a situation where there was a mobile shop. They were trading the mobile phones, back covers, and all those things. They had around 4 to 5 showrooms. So an inspection was carried out at their place of business. And what happened? At the time of inspection, these officers insisted them to make a payment of tax upfront. A payment amounting to around 20 to 25 lakhs, they convinced the taxpayer and made them pay upfront. And a DRC 03 was also made to be filed, thereby adjusting the tax, the payment in cash ledger. So what is the consequence of this spot recovery? See, this activity is called as spot recovery. At the point of time of inspection itself, the officers are recovering a part of tax liability which they consider to have been evaded. So this is very wrong. You should never allow a spot recovery to happen at the point. See, for whatever reason, however it is possible, politely decline to pay tax at the time of inspection itself. Why, I will tell you. In this particular case which we were handling, what happened was they conducted inspection and they took up the case for 4 years. 4 years from financial year 17-18 were taken for scrutiny. So after inspection, the proceedings is then being handed over to the concerned jurisdictional officer at the stage of show cause notice. So at that stage only, the taxpayer came to know that this 25 lakh of tax that he had paid, it was considered as accepted tax for financial year 17-18, and similar demand by considering increasing trend in turnover of around 15% was framed by the officers and are quantified by the officers, and for each of the other years similar liability was demanded in show cause notice as underreported sales. So this is a huge trouble. Once you make a payment in form DRC 03 as voluntary payment, it is considered as accepted by the taxpayer. So what the department officials do, they appropriated this amount for the identified or quantified tax liability, underreported tax liability for the period of financial year 17-18, and thereafter for each of the 3 years, next 3 years, they took the trend from the audited financial statements, and the same trend they applied here also and arrived at the tax liability. So ITC is also not available for whatever reason, and penalty will be charged. Proceedings is initiated under section 74 where 100% penalty is applicable. So all these things, it amounts to a very huge liability. So at the point of inspection, it is of utmost importance that you, under coercion, you are not paying any tax. If at all there is a situation where you have to make some payment, limited to whatever minimum possible amount which you have to pay, and also definitely immediately raise protest. Once the inspection is over, once the proceeding is over, immediately write a letter, and in the DRC 03 also mention that you are paying this penalty amount or tax amount under protest, and then you have to report to your jurisdictional officer. See, there is a possibility that if there is no DRC 01A which is being issued, or DRC 01 which is a show cause notice, if no notice is issued and you have paid the tax, so at that point of time you can claim it as refund. But whereas if the inspection proceeding is initiated against you, it is highly unlikely that you can file a refund application and get this refund. It is very difficult practically to get that amount as refund. So in spite of that, I request you to not to pay the amount, or if at all you are at a dire situation where payment is the only option, limit it to a very small amount and immediately protest the amount which has been paid. The due process of law will be followed even after inspection or investigation. Similar to the scrutiny of returns, a show cause notice will be issued. Either DRC 01A, which is not to be issued mandatorily now after the amendment in 2018. So a show cause notice will be issued, and you can respond to the show cause notice and take the assessment or adjudication in the normal course. So moving on to the next step. INS 02. What are the contents of INS 02? So the purpose of proceeding will be mentioned in the form. You have to get a copy and verify that. The date, location, persons who are present, whether witness is there. See, all these things are of utmost importance if we prefer to go for a writ petition or an appeal at the later point of time during the proceeding. So there you will have to demonstrate how this proceeding was invalid, or how this proceeding should not have been initiated with the reason to believe was not fundamentally stronger, fundamentally there. So these kind of things you have to be mindful. So the copies of documents also, if at all in case of seizure, they are taking the documents away, the officers have to provide a copy. You can obtain a copy of documents which the officers are taking away with them. So please insist at the time of a seizure, you have to take a copy of documents which are being provided to the officers. So next is the order of prohibition. See, if the goods are of very huge size, which is not practically the department officials cannot move it to their offices. So at that point of time, order of prohibition is being passed by the officers, and this is only in certain situations. So we have to be, if there is some certain order, then we cannot really alter the characters of that goods afterwards. What is the procedure that is available for you if the goods or the documents are being seized from you? So you can apply for a provisional release in form INS-04 after making payment through, you need not make the payment. You have to execute a bond in favor, and also you have to give a bank guarantee for the amount of tax, interest and penalty which has been quantified by the officers. After doing that, you can get your goods or books provisionally released. Provisional release doesn't mean that the proceedings is over. It will take time and it will follow the due process of law, like the issuance of show cause notice, then replying and adjudication, right to the appeal or other higher forms. So it will follow the due process of law. But meanwhile, if you wish to get your goods or books of accounts for whatever reasons, you can apply for a provisional release and you can get it back from them. Based on the discovery during search proceedings, the officer has to bring it to a conclusion. As I was talking to you about the show cause notice, either by demanding the tax evaded through a show cause notice under section 74 or by dropping the proceedings. See, there can also be a situation where an inspection results to dropping proceedings, results without issuance of a show cause notice, even though it is a rare possibility, because you very well know that before initiating the inspection itself, the officers are well aware about the data that they have compiled, and then only they initiate the inspection proceedings. So this is rare, but still there is a possibility. There is a possibility that before issuance of show cause notice itself, the total proceeding can also be dropped. The seized articles which are not relied upon for show cause notice. See, this is very important. If a particular seized article is not considered to form or quantify demand in the show cause notice, it should be returned within 30 days of time. And where no show cause notice is issued, see, at a situation where the show cause notice itself is not issued, then within 6 months of the date of seizure, those documents and those goods should be returned back, subjected to exceptions where they can get some more additional time to hold the documents with them. But in general case, 6 months is the time allowed. So these are the general steps that you have to follow during the time of inspection. And these are the other situations which might trigger an inspection. I was talking to you in the beginning in a bird eyes view. What might be the situation which can trigger or which can lead to inspection and thereafter search and seizure. So difference between GSTR 1 and 3B, obviously we spoke about this. Difference between 2B and 3B, these are very common nowadays. And I think from 1st January 2022 after 2B, and also mid August 2022 after the circular which has been issued by the CBIC stating the manner of filing GSTR 3B, whereby introducing the new tables that permanent reversal and temporary reversal being brought into the form. After all those things, I think most of the taxpayers are very much used to the fact that ITC cannot be claimed over and above what is being reflected in 2B. So that should not be a very big issue. That will definitely be monitored on month-on-month basis by your compliance team. Huge refunds with suspicion of fraudulent purchases. See, these things are very much exclusive, which are known to only the department members. They might do some data analytics, and if you have been claiming refunds for export and also inverted duty structure, there might be a possibility that your case is being taken up for inspection. Next one is the e-way bill point. So e-way bill, this is a very specific parameter where the e-way bills of non-sale outward supply. So as we were discussing earlier, the transactions in the e-way bill, you can see that the document type as not as tax invoice. It might be delivery challan or some other documents. In that case, if the e-way bills of not sale outward supply is more than 10% of total e-way bills per month, you can do this analysis by your own by downloading the monthly consolidated e-way bill report from your login and check if it is that for you. And you better have a specific reason for the difference also. An e-way bill for purchases from unregistered person is more than 10 lakhs. So this is also a reason for which your case might be triggered for inspection. An e-way bill for sales to unregistered person is more than 10 lakhs. A substantial delay between, see this thing, you might be aware that GST portal itself has issued an advisory, and the taxpayers who are having aggregate turnover more than 100 crores rupees, they are not able to report. They are not able to report their e-invoices after 30 days of generating the invoice. So your invoice date is on certain date. You will not be able to generate e-invoice for that particular invoice if you are trying to generate the IRN number after 30 days of issuance. So in those cases, it might be streamlined. In other cases, there should not be any significant delay in generation of e-invoice. See, you very well know that e-invoice should be generated at the time of issuance of invoice itself. There should not be any delay at all to be speaking on the merits. So there should not be any delay at all. You just ensure that if there is any pattern of generating invoice and then e-invoices generated on some other day, just try to reconcile your e-invoice report with your GSTR1 report, and you can keep a track of this these changes. So this is viewed as a serious discrepancy by the department, and they might see you as trying to tamper with the invoices and doing some kind of undisclosed sales or such transactions. Then substantial delay between date of invoice and e-way bill. See, this is a very practical scenario. Even in the previous month, we came across a situation where a particular taxpayer is involved in doing export of goods. So export of goods, for some reason, to close the targets or for other practical purposes, the invoice is being generated on the 30th or 31st day of that particular month. And the e-way bill is only being generated at the time of movement of goods, which is also supported very well by the law and the rules also. So there can be a difference between the date of invoice and date of e-way bill. It is very much possible in practical situation, but just ensure that there is sufficient explanation to substantiate the difference. So if you are invoicing at 30th and then later on the export procedures and due to the customs clearances, you are only generating the e-way bill on an after date, afterwards, then you keep your reasons handy. See, at the time of ASMT 10 itself, if this question is being asked, provide a very valid explanation so that they might not, take up your case for investigation or inspection at a later stage. where there is a satisfactory explanation is available. An abnormal growth in turnover of e-way bill when compared with previous months. So these things you have to be mindful of. And also irrelevant inward HSN or outward HSN used in e-way bill. See, at the initial time of getting GST registration, migrating from the earlier tax period, I am very sure that most of the taxpayers might have missed to identify what is the actual HSN or SAC which they are dealing with. This issue has been faced by many taxpayers. So the top 5 HSN will be listed in your GST registration number. So kindly review it. If there is any HSN which is completely unrelated, what you can do is you do an amendment, add your new HSN. So these are the various situations where your case might be taken up for inspection. So I think we have come to the end of this session. I think you have been added value. I have added value to you with regarding this inspection topic. And if there are any questions, kindly post your questions in the chat box. We can take up the questions now. Sir, Ilangavan sir, our sales and service engineers are staying various rooms at different places where we are paying rent to building owner. Please, sir, this is not for commercial rent. This RCN which Arvind sir has specifically told us with respect to commercial rent. This is for residential dwelling. What you have been telling is about the residential dwelling, sir. It is different, sir. 2% TDS on scrap. Govardhan sir, good afternoon, sir. So 2% TDS on scrap will be applied only if scrap name is mentioned. And a scrap seller for buyer, it can be raw material. I don't understand the question as such, sir. You have asked that 2% of TDS on scrap it will be applied only if the scrap name was mentioned. Can you be a bit more specific, sir? Sir, Gunasekharan sir, which date onwards the inspection will start? With effect from? Which date you are talking about? I'm not able to understand because inspection, it will not be informed in prior, sir. Inspection will not be informed in prior. So there is no specific date. Soundarajan sir, there is no specific date restricting delay between invoice and e-way bill. There is no specific rule which restricts that. But this deviation might be taken up by the officers or might be considered by them as a fraudulent activity. And at the point of time during the data analysis, your case might be triggered for an inspection. That was the main purpose behind sharing this data point. Suryanarayan sir, can section 67 be imposed every year? No, sir, it doesn't work that way. If your case is taken up for inspection, then the period of identifying the liability can be of any period, any prior period, sir. It is possible, sir. At one point of time, the inspection may be initiated, and after doing inspection, the liability can be quantified for any of the prior periods. It is possible. Gunasekharan sir has also asked that when the inspection notice issuance started, sir, it has been prevalent since 3 years, sir. I cannot be very specific about which date because in various states it happens at different time. It started at different point of time. So maybe since 3 years it has been happening. Muthusa sir, yes, can the man handle the assessee on assessee if he denies voluntary payment during the search proceeding? No, sir. not at all. Spot recovery, it should not be, actually spot recovery cannot be made. At the point of inspection, spot recovery cannot be made. I also urge you to politely decline to pay any tax at the time of inspection proceedings. Only after receipt of notice, either in DRC 01A or later point at the time of issuance of show cause notice, you make the payment of tax. And Sarpan Kumar sir, can inspection, search and seizure possible for first 3 years where limitation period is gone? Sir, even the notice under section 74 is covered under extended period of limitation. After the extended period of limitation, if it is also exhausted, it is not possible, sir. Prakash sir has requested to quote few case laws regarding inspection, search and seizure. Sir, we do circulate an email in which we give the details of case laws which you can rely upon to defend your case at the time of inspection or at the point of any later stage, sir. So I think I have answered most of the questions. Thank you so much for attending our webinar. In next week's webinar, I hope to meet you in another session with a more interesting topic. So until then, goodbye. Thank you so much.